Hi everyone and welcome to Infonox Market Insights with me, Richard Perry, analysing markets for Infonox on Monday the 24th of June. Now, the significant selling pressure that we saw through Wall Street last week has just started to find a degree of support, but it's only very tentative at this stage. And to be honest, these technical rallies, these near-term oversold rebounds have struggled to really find any real traction before the selling pressure resumes once more. And there is a sense that that may be still happening here. We've still got the US dollar with a degree of support as well. The US dollar slightly outperforming today with the fact that we've still got the negative risk appetite through Forex majors. Today we had the Aussie flash PMIs coming in worse than expected. That means that the Aussie is underperforming today. But we're also seeing that this stronger dollar is just beginning to pull back on some of these commodities such as silver, certainly. Now, the flash PMIs are the big focus for today, but obviously what we've had is predominantly the focus on treasury yields, which have been driving markets higher and lower over the course of the recent weeks, but predominantly lower in the sense that markets are trying to price in this Fed tightening cycle, and the focus on the Fed meeting on Wednesday will clearly be a key in front and center of traders' minds now. So the charts we're looking out for today, we've got the chart of the Aussie, which has broken down an uptrend channel. It was looking fairly positive, but now starting to turn negative again. We're also looking out for the oil price, which has recovered off its uptrend and looking a little bit more positive once more. And also finally, we're looking at the S&P futures, where we had a big breakdown last week, and the resistance is now starting to come back in again at that old support. Now let's have a look at these charts. So onto the Infonox MT5 platform, starting off with the Aussie dollar. We see that this big downtrend that the Aussie has been in throughout 2021 had a counter trend, uptrend channel move in the last few weeks. But if we zoom in a couple of levels, you can see that this trend channel is now being broken down by Friday's selling pressure and increasingly again today to the downside. So also moving below this pivot level of a support area, 7170 to 7185. That is again sort of turning this move sour. You can see that the RSI just sort of on the brink now, sort of turning below that 45 level, which had been supportive through the trend channel, is now starting to again turn corrective. So what we're looking out for is this reaction low support here. That's 7130. If that gets breached, then that really does turn negative. So for now, you're just turning neutral, I think, on this chart, but the outlook is beginning to wane, beginning to show a little bit of sort of pressure to the downside. And if that support at 7130 is broken, then that really does turn corrective. You see on the 4-hour chart here, a lower high coming in at 72.75. You've got resistance also around the 72.15 area as well. And that's whereby we also see that the pivot level, 71.70 to 71.85, is now a basis of resistance. Onto this oil chart. Well, we're still in the uptrend actually on oil, but what we had in last, Wednesday and Thursday last week were two negative candles. And this one specifically, this shooting star, which is ultimately still the dominant candle now on the daily chart, because it's the resistance coming in at 89.55. And RSI is overbought. The RSI sort of pulled back from above 70. So that's a negative signal on a near-term basis. And if this market now starts to sort of falter in the move higher in the rebound that it's got, which the last sort of couple of 4-hour periods it has done, and you can see that the 4-hour RSI is not as strong as it was. So it is still positive in this uptrend, but the signs are that something may be happening, maybe turning that oil price. So you'd need to see that 4-hour RSI above 60 consistently again to sort of regenerate this uptrend momentum, and especially with this move falling over at 89.90 area, sorry, 88.90 as resistance. But for now it's okay, but the key support you can see there is 85.80 area. And finally, with S&P futures, well, the uptrend channel has been just decisively smashed out of the park now. So that's now decisively broken. But also this key reaction low, 44.92. That was the key reaction low from November into December. And also 45.20 area as well. So get the crosshair there. You can see that that is now a key basis of overhead supply. Old support becomes new resistance, and that needs to be taken out to change this near-term move lower. Now, what you have had is this rebound from oversold technical rally, but it's not really going too well at the moment. It's just already starting to turn down. So you've got that support around the 43.80 area, but the resistance of overhead supply already starting to come in around that 43.35. So it's not looking great. So this run of lower highs and lower lows continues. And to be honest, it's still not looking great for S&P futures. This still could continue to come back, and that key support area comes in at 42.70 down to 42.30. Thanks for watching this video. I hope you found it informative, and I wish you good luck in your trading this week. Now, I'll be back on Wednesday where we'll be looking ahead to that Fed meeting, and in the meantime, I'll leave you with the Infinox support and resistance table, and I will speak to you then. Thank you very much, everyone.